In a world that is moving towards digital, electronic, and autonomous systems, the future holds not just in someone who designs this, but also who manufactures it. Today, we are spotlighting one of India's most compelling manufacturing stories, or I would say electronic manufacturing stories, Kaynes Technologies Limited, a company that has gone from being an assembler to a global precision electronic manufacturing services company. Hi, I am Ajay Modi, Investment Director at Piper Serica, a multi-asset investment manager based out of Mumbai. Electronic manufacturing, which is a $2.9 trillion global industry today, is expected to become a $4 trillion industry. India, which was once an importer of electronics, today has become a very central player in the entire global electronic manufacturing supply chain. How is that being possible? The government's push through schemes like PLI, specs, electronic manufacturing clusters, and also the global supply chain moving or trying to look for an alternative to China, which is what people call China plus one strategy, and a very large domestic consumption market. All of this has created a massive electronic manufacturing opportunity in India today. In this, PCBA or PCB Assembly, which is Kaynes Technology's core vertical, is expected to grow at a compounded rate of 35% over the next 3 years. If you want to know more about the detailed landscape of the electronic manufacturing industry, please click on the link above. Founded in 2008, Kaynes Technologies has emerged as one of the fastest growing EMS companies in India today. Between 2020 to 2025, the company's revenue has grown 49%, EBITDA has grown at 58%, and the net profit at a whopping 99% compounded over the last 5 years. Kaynes' EBITDA margins at 15% clearly make it as one of the foremost electronic value-added manufacturing players in the world. What's driving all of this? A very, very strong demand, government push, import substitution, and Kaynes Technologies' deep customer relations spanning over the last 17 years. What is interesting is that Kaynes has an average customer life value or customer relationship value with its core customers for over 7 years. And there has been barely any churn with their customers. Also, no single client contributes more than 15% of the revenue. So it is clearly a very diversified, long-standing value-added player for its customer. Kaynes' business can be divided into 3 parts. The first part, which we call PCB assembly or PCBA, is a simple soldering of different components over a PCB board. You would know of the green colored electronic circuit boards that you would see in any typical device. This is called a PCB board, and PCB assembly is where Kaynes takes a different components, transistors, capacitors, resistors, etc., and solders it and creates a entire circuit which anyone would call the brain of an electronic device. This forms 47% of the company's revenue. It is a low margin but very high volume and very fast moving line for the company. In this, the growth trigger for the company is fast localization of complex multi-layered PCBs, which used to be 6% of our total consumption in 2019 and has become already 55% today and is expected to go to 80% over the next 3 years. The second vertical is box build, which comprises of 43% of the total revenue for the company. Now, what is box build? While we discussed PCB assembly, which is a simple green colored PCB circuit or whatever colored PCB circuit with a lot of components mounted on it, box build goes one step beyond that. In box build, what the company does is it designs the entire PCB assembly, other components, and the entire enclosure. Imagine a device ready to be shipped completely to the end customer. This is what box build is. It is a low volume, high margin business for the company. This is where it makes a very good EBITDA margin. In this, one of the biggest growth triggers for the company is almost 4 to 5,000 crore revenue orders for Kavach, which is India's railway safety systems. In Kavach, Kaynes is supposed to be designing, building, and shipping the entire safety system to the Indian railways. The third line item for the company, or the third vertical for the company, is design and manufacturing, where it not just manufactures a product, but works with a company starting from the design stage, creates a design, manufactures the product, tests it in house, creates a packaging, and makes it a product right in the hands of the customers. This again is very high margin. It forms just 10% of the revenue today, but is expected to become a very large contributor as the company progresses, and thereby increasing the company's overall margins even further. Kaynes has also developed full stack solutions for a lot of vertical products like smart meters, IoT, sensor networks, etc. In fact, the company about a year back acquired Kaynes Technologies, which was once India's largest manufacturer of smart meters. And smart meter alone is a very, very large business opportunity for Kaynes Technologies. The Indian government has created a plan to digitize all electricity meters, or largely all electricity meters for the country by 2030. And this represents a 70,000 crore opportunity for electronic manufacturers. And Kaynes is one of the largest smart meter manufacturers in the country. Let us also talk about the customer and the sector diversification at Kaynes. While everything that you've heard about the company and its different verticals, you clearly know that what Kaynes builds is very impressive. But what is more impressive is who it builds for. Kaynes has a highly diversified customer profile such that it shields the company from any sector specific volatility. Industrial and clean energy forms 48% of the company's total revenues. Automotive and EV forms 29%. Railway systems forms 11%. IT and IoT forms 6%. Aerospace 3%, and medical 3%. So it is very clear that the company has a fairly diversified industry exposure. It has 350 plus clients, and some of them are global giants in their own space. It has very, very long term engagements across all its customers. Let us also talk about the Capex and backward integration that the company is doing. And in this, one of the biggest opportunities that I also want to showcase or spotlight on is India's semiconductor growth opportunity. Kaynes is setting up India's largest, or one of India's largest OSAT plant, where it will package, test, and deliver semiconductor chips to brands and end users. This is a 3,500 crore capex opportunity, of which it is very interesting to note that Kaynes is putting up only 1,000 crores. 50% of this capex, or about 1,700 crores, comes from the central government. Another 800 crore comes from the state government of Gujarat, where it is putting up this facility, and Kaynes is putting up 900 to 1,000 crores of this capex. What this does is it increases the company's return profile and also improves the margin, also gives the company a very long runway without spending additional capital and building a very strong pipeline for future growth. The other bigger capex that the company is planning to go on is to set up a PCB manufacturing plant in southern part of India, which will again be 2 to 3,000 crores of capex, partly funded by the state government there. PCB alone is a very large and upcoming opportunity, almost a $10 billion opportunity in India, where we today import more than 60% of the PCB boards alone. So with PCB and OSAT, the company is getting into backward integration, increasing its margin profiles, and also creating future growth engines for itself and for its investors. What is interesting to note is that with this backward integration of PCB assembly and OSAT plant, the company's EBITDA margins will go from the current 15 to 16% profile to almost 22 to 24%, jump of almost 1,000 basis point over the legacy EMS business. With all of these developments, with all the current lines of businesses and expected backward integration plus the semiconductor OSAT plant, we expect Kaynes' revenue to have a compounded growth rate of almost 40% over the next 3 years and a PAT CAGR of 54% over the same period. The stock currently trades at almost 50 times FY27 EPS. While this is expensive, we believe it is reasonable for a company that presents a 50% plus compounded earnings growth opportunity in business which is driven by very strong technology and which is led by IP and having large growth triggers supported by a very strong focus of the government. The return profile also will improve as we go forward with the OSAT plant coming live. The return on equity profile will increase from 11 to 12% range right now to about 20% plus in the next 2 years as operating leverage starts kicking in. What is also interesting to note at this point is the company's already secured anchor customers for its OSAT plant. This shows that the company is not just focusing on putting up the facility, but staying ahead of the curve in acquiring customers for a new facility. While all of this is good, I would also like to highlight one of the risks here, which is very low cash conversion that the company has faced over the last 2 to 3 years. This was largely because the company was rapidly expanding, acquiring new businesses, and focusing on some sort of government facing businesses as well. As we go, we will watch this as a trigger, but we believe that the company is already on a path to bring down its working capital days from 127 currently to about 110 over the next 3 quarters and then below 90 days in the next year. With this, the company's cash generation will continue to improve. All this while, the company has stayed with a very limited or minimal debt and the balance sheet remains strong, supporting any growth going forward. While we've talked about the company at length, it is also very important to learn a little more about the management. Let me share a spotlight on the company's management. The company was founded by Ramesh Kunikanan, a first generation entrepreneur and someone who brings in 30 plus years of electronic manufacturing experience. He founded Kaynes when electronic manufacturing in India virtually did not exist, and today Kaynes is among the largest electronic manufacturers in the country. He's backed by a team of seasoned executives across finance, product development, manufacturing, and semiconductor domains. The CFO comes with years of experience in Capex and cash management. The operations team includes veterans from automotive and semiconductor industries, something that is vital for scaling a precision manufacturer. For investors seeking long-term compounding opportunities with pricing power, sectoral insulation, and operating leverage, Kaynes clearly stands out as a winner. At Piper Serica, we invest in exactly these kind of opportunities, where we see a strong combination of executive strength, strategic modes, and very long-term growth visibility that is backed by a certain key triggers and that is supported by an entire ecosystem coming together. Piper Serica is a preferred gateway for global ultra-high net worth individuals and family offices to invest in India's growth-oriented public markets. We deliver strong returns through our deep fundamental on-ground research, disciplined ownership, and minimal churn. And if you would like to learn more about India's innovation economy, subscribe to our channel and stay tuned for our next videos. In my next video, I will spotlight about one more emerging high growth electronic manufacturing opportunity. Till then, stay tuned and have a great day.